Hello and what is going on, lovely people of the internet? It is HOOTMONEY here with another video for you guys today. Today we are going to be giving you guys an update on Clover stock. We're going to take a look at a few other stocks as well that have potential short squeezes in the works. Clover Health went on an absolute tear yesterday, and this morning in the opening it has gone down just a little bit, but it's still above $20 a share. So we're going to be updating you guys on what exactly the short interest is and looking at a few other metrics as well. So I hope you guys enjoy. Make sure you guys subscribe to the channel so you get updates like this every single day. And yeah, if you like the video, liking the video is the #1 thing you can do to help out a content creator like myself. So I would very much appreciate it if you guys threw me that early like on the video. Now, without further ado, let's get right into the video. Alright, so as you guys can see here, we have Ortex. I actually bought Ortex so we'd have the most accurate short interest data. So if that's not worth a subscribe, I don't know what is. But anyways, you can see here, we have sorted it by percentage of free float on loan, and we're going to scroll down. You can see the first one that's a recognizable name is Workhorse Group at 48.5% of its free float on loan, but Clover Health has about 45% of free float on loan. Now we're going to go over specifically to Clover Health's data. As you can see right here, we have days to cover, which is this green line right here, and then we have short interest percentage of free float, which is this orange line up here. So as you can see, as of yesterday, the estimated short interest percentage of free float is 46.56%, which is up from the day before, which was 44%. Not by too much, just by 2%, but still. But what I really want you guys to look at is this days to cover went down. So as you can see, yesterday days to cover on loan was 2.05 days, and now days to cover is down to 1.48, which is signaling that the short squeeze is currently occurring. You can also see how the volume down here, this blue bar, has gone up just a bit. Actually, more than just a bit, that volume has gone up a lot, and with days to cover going down, that shows that the short squeeze is currently in progress. So with that being said, there is still more room to run with Clover. However, a lot of shorts have already covered as the days to cover has gone down. Now if we look at Clover's chart here, you can see on the day it's at $25 a share, and this is just after pre-market. It's about $9.48 right now, and you can see it kind of fell off a cliff. And a lot of this has to do with the volume coming down here. As you can see, the volume yesterday was very, very high, but now it's coming down and the stock price is coming down as well. And with days to cover coming down as well, that's a potential signal that the short squeeze has occurred in Clover, and it is pretty evident. As you guys can see, it is up about 150% on the week. So a lot of shorts have definitely covered. I think most of the shorts, at least some of the early shorts, definitely covered yesterday, and a bunch of new shorts have come in at these elevated price levels. So that is a risk. I just want you guys to know that that is a risk. Some of the early shorts, some of the people who have lost the most money from Clover have definitely covered their position as of yesterday with the huge volume influx that we saw. But a lot of new short positions has come in. As we saw, the short interest percentage did go up yesterday about 2%. So that means people are shorting at some of these elevated prices. So in my opinion, the only way for this short squeeze to continue is for the price of Clover to continue to rise. Now on the day, it is down from its pre-market values, so it might be a bit more difficult for it to rise now, but if it goes into the $30 range, then the short squeeze can continue. If not, then the shorts may win on this one. If you guys would like to have up to $50 in free stock just for signing up, you can deposit as little as $1. Use the link below in the description or in the pinned comment section to sign up for Public. Public is a stock investing brokerage. It is much, much better than that of Robinhood, and this is because it has the same nice user interface as Robinhood, but it doesn't have all those shady business practices that Robinhood does. Public is not going to be loaning out your AMC, your Clover stock behind your back to hedge funds so that they can short it. Public will be doing none of that. They don't sell your trading data. They rely off tips alone, so they don't make any money if the customer is not happy. So their whole business model is satisfying the customer, which gives them amazing customer service, and it's just such an easy to use and great investing application. I have a YouTube portfolio where I invest $100 a week and you can follow me and see what my holdings are on public. So once you guys sign up using that link below, and you can also use code HOOTMONEY if you just want to download it from the App Store, you can follow me. It's at HOOTMONEY, and you can see all of my holdings. So definitely sign up for that. It's basically free money just for signing up, so I definitely recommend you do that. And yeah, let's get back to the video. Another stock that I want to look at is Workhorse, which is also undergoing a bit of a short squeeze. Now, we take a look at their numbers. As you can see, the estimated short interest of free float is 44.47%. So it's very, very similar to Clover. They both have about a 45% short float currently. And the days to cover on loan is 3.53, which is higher than that of Clover, which means it has higher potential for a short squeeze because it'll take longer for shorts to cover if this stock price does go up. 3.5 days compared to 1.5 days with Clover. Workhorse may actually be the next one that becomes a huge meme, especially if the stock price does continue to climb. Now, we're going to take a look at Workhorse on the day. It has also come down from its pre-market values, and this is what a lot of these short squeeze stocks have been doing today, and Clover is no exception. So if we take a look at some of the volume numbers, you can see that the volume numbers on Workhorse are really not too high. As you can see, yesterday at the morning there was high volume, which definitely indicates that some shorts did cover. So with all that being said, I think Workhorse is a bit more set up for a short squeeze right now, but at the end of the day, it does rely more so on what the internet hype is and the social sentiment. So if people aren't currently talking about Workhorse across online forums, then it definitely has less of a chance of a short squeeze. Now we're going to take a quick look at the Wall Street Bets forum. Their daily popular tickers thread for June 9th, which is today, is Clover, BlackBerry, and CLNE. So with that being said, Workhorse did not quite make the cut. I think Clover might have a bit more potential, even though all of these stocks seem to be falling at the early hours of this market. So currently, I think my two top picks right now are still going to be Clover and Workhorse, as they definitely have the highest short float currently. I still think that investing in some of these stocks is considered gambling and not investing, as you're not investing in a company that has good fundamentals that will earn you money over time. You're investing in something to take money from people who have shorted the stock, which is a completely different story than what fundamental investing is. So that's why I think it's a bit more like gambling, because at the end of the day, people can continue to short the stock as the stock price goes up, as long as the borrow rate is not too high. So at the end of the day, it's really a game of cat and mouse. Who can buy more? Who runs out of firepower first? Is it going to be the apes, or is it going to be Wall Street? So at the end of the day, you really just don't know what's going to happen with these short squeezes. Yes, it has potential to make a lot of money very, very quickly, especially if you can get this stock price to rise upwards of 50%, 100% in a day. That is absolutely huge losses for short sellers, and I definitely do see the potential of making tons and tons of money with a short squeeze. However, I still think it is gambling, because people do run out of firepower, people do run out of cash, and if the stock price can't continue to climb, then the shorts will definitely win because they aren't losing any money. So these stocks need to keep going up, or else the shorts aren't losing money. That is something you guys need to consider. They can keep reloading their shorts, as at the end of the day, it is synthetic shares that are borrowed from these stock brokerages. So at the end of the day, I think the market maker is the true enemy, because they are the ones who are loaning out these shares to shorts, and you don't always want your shares to be loaned out. If you own a share on Robinhood and they're just secretly loaning out your shares to short sellers to short sell, yeah, I mean, I think that's pretty messed up by Robinhood. It'd be awesome if you guys had the option to turn off your shares from being loaned out to short sellers. But at the end of the day, if you are bullish on a stock, loaning out your shares to short sellers is a good thing, because as you can see, it does push up the stock price if the stock does do well. I did subscribe to Ortex just to get the most accurate data for you guys, so if that's not worth a subscribe, I don't know what is. Like the video if you guys haven't already, and check out Public using the link below in the description or in the pinned comment section. You get up to $50 in free stock, basically free money for signing up, so you might as well do that. I hope you guys enjoyed, and peace.